Grow your practice, grow your wealth, grow your impact. Find out how to spend less time in the dental chair and more time on the things you love.
All right, I want to welcome you back to the Dental Wealth Podcast. I have got a special guest in the studio with me today. His name's Chris Cochran from Affinity Bank. Say hi, Chris.
How you doing?
We've got a good show for you. I've actually asked Chris to come on because there's this idea of being bank ready and understanding the difference between what maybe a local bank does versus a large bank, some of the things that he deals with clients, because especially in this economy, it seems like people are growing and they're buying buildings, and there's a lot of movement, right, going on right now.
Absolutely. We're seeing so much activity out there. It's really different than it's been the previous years, for sure. Because
of that, I asked Chris to come on because I think it's extremely timely to take some time and just talk about what you should be looking for in that relationship, things that you might encounter, maybe things you've missed. And so I want to just jump right in. And I think I want to tell you why I'm a fan of your bank and why I'm a fan of you and having you on. I believe that one of the things you have to look for when you're looking at banks is where's the decision-making power? One of the things I tell clients all the time is you need access to capital. You need access to capital. You need access to capital. If you don't know this, the number one need of a business, and I don't care whether you're a small business or a large business. One of the reasons, I think last week Payless Shoes went out of business, Toys R Us went out of business, even companies like Lehman Brothers went out of business. Access to capital becomes huge when you're a business. And I think sometimes we take those concepts and we only think about them for giant corporations, but banks, have the ability to make decisions that help you have access to capital. So for me, when a bank is local and can walk into an office and have a conversation,
that's right.
That's powerful. So just to give you some background, some of you aren't in the Atlanta area. Some of you are kind of all over the nation. Affinity Bank is a bank here in the Atlanta area that deals primarily with dentists, has hundreds and hundreds of dental clients, and knows the needs of dentists. So when you have somebody to approach you and talk to you about their situation, so I've got a client who says, hey, I want to go buy a building. How is that different at maybe a local bank like Affinity Bank versus maybe a large firm that's maybe national? How would that be different?
I think the biggest difference, Eric, is that with Affinity Bank, I'd say 85% of our entire portfolio is comprised of dentists, and then some medical professionals as well, and other verticals. But when our clients call Affinity Bank, whether it be from the bank president, CEO, whose wife's a dentist, to myself, who's been there 12 years working almost exclusively with dentists, to the client service representative that they call in on the phone line, we're able to help them, and we're already mindset and geared towards dentistry or towards medical. And so, you're not having to, re-explain your story. You're not having to, we're not having to switch gears from just dealing with a different type of company, switching over to medical dental. We're already in that mindset, so it saves a lot of time. Also, we understand that typically you're right in between a patient. You might be seeing one patient, going to the next, and giving us a quick call. Hey, Chris, whoever at Affinity Bank, I need XYZ. Well, we understand that that's not, it'd be a good idea if we did that, wrote it on a note and stuck it aside. We get it done. We understand that you're in between patients and need to get it done. But in your scenario, you mentioned, hey, Chris, we're looking to acquire a building. There's a lot of different things that differentiate us between other people or other banks. But one of the things with the building example alone, I mean, it even, the focus of medical dental, we even use dental focused appraisers, which can make all the difference. I just spoke with a gentleman yesterday who's dealing with an appraisal that came in undervalued. And I'm like, well, let's take a look at the comps. We looked at the comps. The appraiser actually appraised the building using comps of a general medical office park. And, that's can make a difference. Some of the plumbing, electrical, there are differences for specific
Well, I think it's
dental
a
build
big-
outs.
big difference,
It's a big
right? Yeah,
difference.
yeah.
So, and taking a look at it, we're going to get a dental specific appraiser to take a look at that project, and I think it's going to make all the difference. So, there are many different situations that we can look at and apply our specific knowledge, industry knowledge to those instances. But, for this guy, that can make the entire difference. I mean, this is a project where he's purchased the property. He's got plans. The equipment reps, they've got pulled everything together. Everyone's ready to go, but now there's a financing issue. And that financing issue may be a driver of just, a typical local bank that just did not use the appropriate valuation methods. So,
well, it's interesting. We were talking about qualifying, and I've told Chris before. I said, what I love about having a bank, and I tell all my clients, it's so important to have someone who can walk into the president's office, right?
That's right.
It's so important to say, hey, I've got a situation. I think sometimes frustrating, whether it's personal, business, when you look at a situation that looks like it's clear as day that someone should be approved for a loan, but they don't get approved, and there's no really rhyme or reason, and nobody can explain it. So I want to ask you a question on kind of two fronts. Well,
sure.
I will tell you that part right there drives me insane. So I'm glad. Yeah. I mean, the idea, and I'm just telling anyone listening to this, you want to work with a bank. You want to have that person be able to have local decision making. There's so much power in local decision making because somebody can walk in and say, this is what this doctor's trying to do, and here's why it makes sense, and they can make decisions at that local level. They're not worrying about having to run it up to 18 different levels, and because what I find most often is time is an important thing in these deals. Right. Would you agree?
Absolutely.
Because, what I find is people don't tend to come to me and say, and it does happen, but it's rare. Somebody comes to me and says, hey, I was driving down the road the other day and, I saw this building and it's for sale and I've been looking, or this practice just came up, right? That's what happens. It's not like people are actually, yes, like I said, some people do go out and search the plot and the land, and I get that. But most often what people do is they call me up and they go, like, this deal just dropped in their lap,
sure.
Whether it be a piece of property, whether it be, a building, whether it be a practice they want to purchase. And they want the decision to be made that day. Like, they want to be able to move forward, or at least know that they can move forward on it. That's where I think that a local bank has an extreme advantage. Would you speak to that for a second?
Yeah, absolutely. I mean, we have a lot of those situations, and a part of it, is a lot of clients that we have, they like to evaluate different projects. So being their local bank, their community bank, I'll talk more about that. We keep a file, basically, and I'm like, hey, client, let's keep the most updated financials possible. When you come across a project, let's evaluate one versus the other. Let me be your business partner to determine whether or not, help determine whether or not this project will work for you. And so having that localized decision making, I can go in and with the 2 or 3 different options and be like, hey, look, client's looking at A, B, C, would we approve all of them, none of them, one of them? And go back really within a quick period of time and get back to them and let them know, hey, pre-approval, spoke with chief credit officer, bank president, this is what we're looking at. Before they ever even put in an offer, within 10 minutes, I can have them a pre-approval letter, say. And, then they know what their financial situation is. They've got their pre-approval letter and they can start making decisions quickly. This isn't a week and a half, 2-week process. This is like a 1-2 day process. And I think that's a major advantage that speaks to the relationship that we're able to offer, over some of our competition.
I think, well, and you, I've had you jumping on those, and that's been a huge help. And so if you're listening to this right now thinking, when I've got that deal in front of me, who do I need to call? And that's why I'm trying to push you in that direction to understand, hey, you need local decision making. You need time becomes the essence. Time becomes the essence. And so that's why relationships are so powerful. And we'll talk in a second about dispensing of relationships, which I'm not a big fan of. But one of the things that I come across, and this is something I see, I'm a financial person, so I spend my whole life reading financials. I know you do as well, but reviewing financials, reviewing deals, reviewing those types of situations, because oftentimes people come to me and they say, "Hey, I want to buy a building, or I want to, expand," and sometimes I see these loans that come across from, to give credit, other banks, and I see some things come across my desk, and when I look at it, I know it's a bad deal. And I know it's a bad deal, and I know that when I mean by bad deal, let me actually be more clear on that. It's a deal that if anything was to happen, right, in business we have something called pessimistic modeling, which basically says we can't always assume the best case is going to happen. We'd also have to look at the worst case scenario. Hey, what's the worst case scenario? And so when you're a gigantic bank, look, you kind of put it into your numbers that, hey, we're going to lose somebody, we're going to lose some dentists along the way. Some people are going to go bankrupt, they're going to go under. So we'll lose some deals, but we're so large we can take the hit. And so I see deals that I'm not a big fan of. And I always ask somebody, would you put your own money on the line, right?
That's right.
And so I see things that get approved. And so therefore, when the doctor sees that it's approved, they assume that it's a great deal and they're making the right decision. I want you to kind of speak to that for a minute because, and by the way, we saw this in 2008, right? There's all kinds of mortgages being done on people that said, hey, well, the bank gave me the mortgage, and so then it must have been a good risk. Now it's like, well, you were making $4,000 a month and you bought an $8,000 a month mortgage, but yet these banks were writing it. And they blame the banks, even though the individuals maybe probably knew that they couldn't afford that. But speak to the idea of what would happen. So if a bank approves it, rubber stamps this, does that make it a good deal? I mean, can you just kind of close your eyes at night knowing that the bank approved it and that's a good deal, and you can be rest assured nothing's going to go wrong?
Yeah, and I think the big thing about that is, especially out of residency programs, there's some residency programs out there, being medical or dental, where the resident will get a blank check sometimes even before they even graduate, regardless of what the project is. And that's can be seen, I guess, as a good thing and a bad thing, depending upon how business savvy you actually are as a client. So I've seen many situations where people have gotten a blank check that just fits the criteria of the bank without really running that process or running the deal, the finalized deal, what the deal truly is, past the bank to determine whether or not it's really a good thing for you. So, I would caution going into a standard approval. I would make sure, and even if they give, the bank gives you good news or bad news, I would make sure to focus on, with whoever your professional banker is, the true details of the deal, the details of the lease, the details of the build out, the details of the equipment purchase, the details of your financing option, and really make sure that all of it makes sense for you. And if you're going into it and you've gotten a blank approval 6 months before you're out of residency, and you start looking at this deal, you start looking at the area, and you feel that maybe this deal isn't right for you, pay attention to that. Because a startup in a lot of cases is one of the most risky types of deals that there are. And those are the deals that are being written blank checks. So that's something that I would really caution. Once you're through the startup phase in your practice, the first 12 to 18 months, and you've been successful, you can still get yourself in trouble. But for the most part, with that particular business, you've gotten through the tough situation, but still, as you build the buildings, as you buy the additional practices, as you do, listen to professionals, listen to, take into account, each person's going to be coming from a different perspective, and take those individual perspectives and make sure that it makes sense for you. There's so many people, we've refinanced people, out of loans that have been 20-25%. And I'm not talking about ones that couldn't seek financing elsewhere. I'm talking about people that just signed the first deal that they got, just signed the first approval they got. If you're looking at a 25% deal and the market's not at 25%, look at another option. Try to get yourself in a situation that's going to work best for you.
Well, and literally Chris just looking at a client, because one of the things that also happens is your assumption that your bank's going to call you up and just say, hey, listen, we were looking at the numbers and we could save you, $8,000, $9,000, $10,000 a month if you refi. Recently asked Chris to look at a deal, and it's going to save a client that I'm working with a lot of money per month. I mean, when I say a lot of money, I mean terrific, like it's six figures type per year. That's a lot of money. And the local bank didn't call them up and tell them that they were just going to cut them a deal, right?
Yeah, and in fact, in this particular deal you're talking about, there's, and this is, I want to make a distinction. There are community banks, and our differentiation, we're also a community bank, right? And I'm not saying all community banks fall in this, but as you get into more rural style areas, community banks tend to focus on just their geography, and they really tend to focus on real estate lending. Real estate lending is a big thing, but for dental practices, with the rural community bank is sometimes kind of tough. They don't really understand the equity piece, and they don't understand goodwill at all. So, for Affinity Bank, I classify us also, we are a community bank, but our community is the dental and medical community. So our community could span, across the entire United States in the dental medical sense. Now, with us understanding that dental medical community, we really understand the goodwill and the ability to lend to a dental or medical practice. And the deal that you're talking about was a practice that is a high-performing practice that, went to their local community bank, and true to form, the local community bank said, yes, we can do this loan, but it's going to have to be over a 4-year period. And so they're paying $20,000 a month, with this situation. And it is absolutely unequivocally the wrong thing for this practice.
That's staggering. Yeah.
And so you saw that, you picked up on it immediately, you sent it to me, and understanding dental and understanding equity and goodwill, it's not something that I always like to do, but in the right situation, and this is absolutely the right situation, extending that term to an appropriate term for their business model, and it really makes all the difference in the world. And so I think that, for that particular client, we're going to be able to completely change their world. And again, it's all having a good understanding of dental.
We talk about dental wealth. I mean, the idea of dental wealth, one of the things I'm trying to do is get people to invest within the practice, really understanding what it can do to transform their lives. When we start losing that much per month, right, we start talking about six figures a year, what we can do with that and invest back into, by the way, a very highly successful practice.
Highly successful.
I mean it's staggering the amount of return we were losing and the opportunity costs that we identified. So, I mean, this is going to be it's going to be amazing to this practice, because you're going to take an already successful practice and then we're going to just crank up the dial, right?
That's right.
It's going to be so much for them. So it's going to be awesome. So those are the kind of things I want to, I want people to be aware of and say, look, there's probably, what I'm doing needs to be looked at sometimes. Probably does need to be reviewed. How often should we be looking at kind of someone's situation? So if I put something in place today, how often should I probably just take a look at my current situation? I
would say, for this particular person, they were feeling a lot of heartache, and a lot of stress. If you're feeling stress, if you're feeling like, I just recently wrote an article on which said, is your bank dental friendly? And really what that's all about, when you feel like you've a term you've used before, outgrown a relationship, or if you feel stress, like well, my practice is performing well, and but I can't seem to get out of it, and you're making appropriate financial decisions. When things just aren't seeming to match, I would just say I would encourage you to give, if it's not us, give somebody a call and just see, just run the scenario past them. It's very important because, most of the clients I work with, they really enjoy what they do, and I really enjoy working with them. So to have the kind of added stress for the client we were talking about earlier, it's just not really appropriate in most situations. And so if you're feeling that stress, give us a call. And one thing I can offer with Affinity Bank is that it's a low pressure scenario. We are not paid based on the loans that we close. It's just, we are, it's a very friendly environment to be able to call and get opinion. And I'll say this too, we can't help everybody, and in most cases, everybody's busy out there, but what I will not do and what we will not do at the bank is if it's a decline, typically it's not a forever decline. What we'll do is we'll spend the time with you, let you know exactly where we fell short, in the credit, and talk to you about situations and how we can improve the credit to get you that approval. And I can't tell you how many situations we've had over the years where someone may not have been approved for a certain acquisition or a certain startup or whatever at that time, but 6 months, a year and a half down the road, they are our biggest fan. And so, and the reason that is because we took an extra, moment. We spent extra time with them. We let them know exactly, what makes an approvable, bankable deal. And then we followed through on what we were going to say.
Well, I think that what you're just talking to is about relationships. And I think that, my biggest thing is, anyone who's spent any time listening to me and talking with me or worked with me, understand this. Like, relationships are so important. If you look at the most successful people have great relationships. They have amazing people around them that would fight for them, that will do amazing things. And listen, if you're one of those people that are listening to this right now that get rid of relationships over an eighth of a point, the only reason you should ever change relationships is out of sophistication. If you realize, and by the way, most people I work with over time, their sophistication changes. And what I mean by that is they might have to change out their accountant. They might have to change their financial advisor. They might have to change a lot of different things, because as you become more sophisticated, as your financial situation becomes more sophisticated, you need to work with somebody of the same sophistication. So I think sometimes that's something to look at. I think that you have to look at and make sure your advisors match up to where you're at. So outside of that, do not just dispense of relationships, and especially not over an eighth of a point, or because what ends up happening is that stuff comes back to you. You'd be surprised that today you're flying high, and then we have another 2008 or something happens, and you need a friendly ear, or you need someone to go to bat for you, or you need to have somebody walk into the president's office and go to bat for you. You want that ability, and I'm telling you right now, if you're listening to this thinking, well, hey, I'm just going to shop for the cheapest bank, I'm just going to tell you, I'm going to push you away from that all day long, because I will tell you, relationships are what makes business people successful. As a business person, you should be looking for relationships, not eighths of a point. The truth is, because those people care about you, they'll make you a heck of a lot more money on a lot of different areas. I mean, thoughts on that, Chris?
No, absolutely. I mean, that's 100%. I don't know what more I can say. I mean, if you're a bank and you're operating in the dental arena, then you're going to have to be competitive, right? I mean, it's competition and rate offering and terms and all that. That's a baseline. I mean, you've got to be there. But what I typically will tell people that are in a scenario of, evaluating a few different banks, potentially leaving a relationship, we don't see a lot of that. But when there is, I'll be like, look, you need to follow your heart. You need to do what you feel is right. And if you feel like, that a transaction style bank is the right scenario for you, then that's one thing. But if typically what people will do is they'll follow their heart and they'll follow the relationship, especially if they've got long-term plans and they've got, different projects they're gonna be doing. They want somebody that they know they can call and do what we were talking about earlier and evaluate 2 or 3 different scenarios. And so, I will tell people, I'll say, hey, look, I understand you've got 2-3 banks or 2-3 contractors or 2-3 whoever, in evaluation. And I was like, look, make it easy for yourself. You've gone this far. You've gotten through school. You're a business owner. You've gone on your intuition and your gut. I was like, choose who you feel is going to be the best partner for you, business partner for you in the long term. And I mean, sometimes it works for me, sometimes it works against me, but really what I'm going for there is to identify for myself who is going to be the relationship client, because that's important to me as well, and important to Affinity Bank.
Well, lastly, I want to touch on one more topic. The idea of being bank ready. So one of the things I always tell clients is that, as we were talking about earlier, is that sometimes opportunities just pop up. And I would actually argue more times than not, they just pop up. And if someone's running around getting their financials because they don't have them together, and they don't have their tax returns because they have to call their accountant, what does someone need in your eyes to become bank ready? So two things I want, if you'll answer that, and then a second piece of that question is, I also want you to touch on the idea of the narrative. What I mean by that is, and one of the things I tell clients all the time is, there's this narrative, and people don't realize that. So what I mean by this is, I was dealing with a practice the other day they're literally doing, upwards towards $10 million. Yet if you saw their bank account, it would look like they were a $200,000 dental practice. Now, the doctor was comfortable with this and the way he was managing cash flows, but I said the narrative was way off. That if I was to look at this deal on paper, and I look at your balance sheet, and there's no money and there's no cash in this business, I don't care what you have on personal assets, it scares the world out of me that you're taking all the money out of the business. So there's part of this narrative. So if you'll kind of touch on those two topics, one being bank ready, and two, the narrative that the banks look at, because I think this is a great thing for people to understand is what do you need to be prepared, and two, part of that preparation is understanding that there's going to be a group of people sitting in a room looking at your stuff, and what are they? Does that matter, or is it a formula? Or do people actually look at this stuff, and is there a story that they're trying to paint?
Yeah, it is. That's exactly what my job at Affinity Bank as a commercial lender is, to invest the bank's money. And of course, similar to you, taking your money, which you said earlier, is this a project that you would personally invest yourself? We really look at it that way. And so the bank ready thing, I would recommend, just on the most basic level, that you've got your returns handy. If you don't, that you could contact your CPA, send us the returns. I recommend that you keep a good P&L balance sheet. I just ran into a situation the other day where someone's misstated their P&L and balance sheet, and it wasn't necessarily their fault. They didn't misrepresent themselves, but they just weren't ready. And so that's prolonged their situation in a scenario that they've come across a opportunity that they've got to act on. Exactly. So being bank ready, have some fallback. Personal fallback is something that we look. If you're a dentist that's been out of school for 10 years, either practicing an associate or whatnot, have saved a little bit of cash. I like to say, which is not a hard and fast rule, but to have 10% of your project just as for something. We may lend you 100%, and we may lend you a line of credit, but still have some fallback. That's important. And then the narrative piece, which is so important. My job at Affinity Bank is to tell your story. And we're sitting in a loan committee. We're talking about what makes sense, what doesn't make sense, and going back to what you were saying. So I've seen practices that have net income of 400, 500,000. And then we look at the personal deposit account. The practice accounts, will have no money. The personal accounts, deposit accounts, you're like, oh well, if the practice account doesn't have any money, then the personal accounts must be large, because they're spending off $400,000 or $500,000 every single year, and there'll be no money in the personal account. It all speaks to the narrative. It's like, okay, well then we have to figure out, like, where is $400,000 or $500,000 going? And so you start going down that road. If you're in a position where you want to do additional projects, big projects, speak with your financial advisors. Let them know exactly what you want to do, because they'll help you with that narrative. Talk to the banker. Hey, what do you guys expect to see? I'm not looking to get into this project for the next year and a half, 2 years, but what is it that you're looking to see? Like, what's important to you? And if you need to connect us with your CPA to have those discussions as well, hey, we're open to doing that. So It's important on both sides. One, if you've got upcoming projects, to have your financial scenario in order, so you can hand over a package to a bank, and you can have some cash in the bank, and be prepared mentally for whatever project you're doing. But then to also understand that there is a narrative behind it, and that narrative is my job to be able to tell your story internally, to get that approval.
Well, Chris, I want to thank you for being here today. This is really, really, really helpful. And you guys, I tell you, relationships are so important in this business. Chris and I have probably worked together for, it seems like a decade probably, and probably that's true. Worked with so many clients together. Listen, I want to bring people on this podcast who can be helpful. Whether you're in the Atlanta area and Affinity Bank's a choice, whether you're somewhere else and there's another bank, I'm thankful for you thanks Chris for telling people what to be looking for. And look for in a bank, because I think those things are powerful. I'm going to encourage you, please don't dispense of relationships over eighth of a point. I will tell you, we've had so many people come up to us that have asked us to help them out in a rough situation, and no banker will look at them. And the reason why is they dispensed every relationship over the years. When times got tough, nobody was there, right? And so you got to be careful about just dispensing relationships. So build awesome, amazing relationships. If you're going to create wealth, if you're going to use this practice and get where you want to, I'm telling you, the very best, most successful people build relationships, and they stick with them. And those people are there to help them. Chris, thank you for being here.
Sure.
If people are listening to this and they want to reach out to you, run something by you, have a quick question for you, what's the best way for them to get a hold of you?
My cell phone is the best way to reach me. Text 404-717-4583, or please just give me a call.
Well, appreciate you being here. We'll include that number as well in the link. Thank you for being here. Hope you guys enjoyed it, and we'll talk to you soon.